could be one, I think, so it's something that you're bullish on.
Yeah.
But run us through the rationale on those two top themes.
See, we have been, if you have to really play data center story, I think power is a theme, like how we played copper for the EV thesis in the past. I think power or energy as a sector is a great opportunity. That's one of the reasons we have more than 20-30% exposure in this space.
Okay.
So that's the one space which we're looking very constructive. Second space, as compared to IT, we like pharma as a space. I'm not saying all the pharma companies, but a lot of generic companies. And we have to keep in mind some of the pharma company will face challenges on the solvent side or their raw material side, which is a derivatives of crude in some manner. So those are the areas which you have to exclude. Then I still like, in the current context, the BFSI space. Private sector over public sector. We still like insurance could be opportunity. Asset management company itself is opportunity. Wealth management companies are thing, because asset management companies are serious threat to banking from a longer term perspective. I think great businesses which is getting, we are also part of that industry, so we understand that space quite well. And I think other areas which have to look at should be the sum of the consumption theme. The FMCG stocks particularly, they are still expensive. On relative basis, they have corrected, they have underperformed. Many stocks are in the neglected zone. So I will look for food processing companies also should be opportunity. And if I have to avoid at this point in time, I think it's a manufacturing space, because we really don't know. And none of the companies will going to really explain, because they themselves also don't know how exactly it will. So more from a conservative approach, I like to avoid manufacturing company. You cannot avoid completely. So I will say I will dilute these holdings and look for opportunity once we get more clarity on numbers, maybe down the line a quarter or so.
टर 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 सिस्टर बीना का मैसेज आया है, अर्जेंट। लिखा है, मेरे बच्चे के ट्रीटमेंट के लिए 1 लाख रुपए चाहिए डॉक्टर, तुरंत भेज दीजिए प्लीज।
सिस्टर बीना, मैं पहले सिस्टर बीना को फोन करके पूछूंगी, फिर भेजूंगी, क्योंकि मैं मूर्ख नहीं हूँ।
वेल डन डॉक्टर। यूपीआई कहता है अगर पहचान के व्यक्ति से भी ऐसे मैसेज आए तो हो सकता है कि उनके मैसेजिंग ऐप हैक्ड हो। तो पहले नॉर्मल कॉल करके चेक करो और कहो, मैं मूर्ख नहीं हूँ। जाइए, आप भी किसी का टेस्ट लीजिए।
जैन सर।
वीना जी, हाय। मैंने सुना है घर काफी अच्छा बनाया है। बढ़िया है ना राघव?
Try some of you.
Delicious. मैंने कितनी बार बोला इनको कि टाइल्स बदलवा लो, सुनते ही नहीं। वीना, अरे ये तो देखा ही नहीं। Beautiful. And what is this called? Casa Mood. Dazzling. Take a look at my boom bam party house. Party, party, party house. Party, party, party house. फिर आएंगे हाँ?
जिंदल साहब तो आज बड़े खुश लग रहे थे।
करण, तुमने ये टाइल्स कौन सी लगवाई हैं?
कचारियाँ।
क्या बात है।
जब घर में कचारियाँ टाइल्स लगाओगे
तो लोग तो पूछेंगे ही।
इंडिया का फर्स्ट हेवी ड्यूटी हाइब्रिड एसी Mitsubishi Heavy Duty AC with long reach airflow and 3D cooling. Mitsubishi Heavy Duty. Live life heavy duty.
Hindustan Unilever and CNBC TV 18 bring back lessons in marketing excellence with an exciting new season. Finalists from across the country tackle the challenge of unlocking the orange economy while scaling HUL's products for new consumers. Watch who will rise to the top and take the trophy home at these times only on CNBC TV 18.
Premium boarding, premium space, premium meals and more in India's only premium economy.
It is compulsory licensing, etc. That's always a concern for innovative companies, and I think regardless of the industry, that would raise a red flag for anyone in terms of investments. You know, where I think the biggest opportunity is right now for India is to implement what we see in most other markets, that's called the regulatory data protection. And it means in an essence that all of the data that the innovative industry is creating, that's data on efficacy, that's data on safety, Those are investments of hundreds of millions of dollars. I think it's reasonable to request that data is protected for a certain period of time after a new medicine has been introduced, and that's pretty much the standard in most markets in the world. And I think that's something that is currently missing in India. That could be a really nice signal to the external world.
Okay, all right. Harish, let me get you in there. Now, we look at global markets and we look at PEs, return ratios, and the likes. You have another way of looking at it as well in terms of India's market capitalization as a percentage of global market capitalization. Could you tell us what does that come down to and what does it compare with in terms of averages? Is it lower than what we've normally seen?
Sure. So India's share of world GDP of economic activity is roughly close to about 4%. Okay, roughly a $4 trillion economy on $102 trillion global economic output, right? And if we tend to grow at anywhere between 9 to 11%, and the world growing in nominal terms anywhere between say 4-ish odd percent, give or take, how it eventually pans out. You would think that this number should be anywhere between 7 to 8% over the course of the next decade or so, right? Now, it is in that context that you should look at the India share of market cap.
Right.
Okay, India's share of market cap is currently close to about 3.1%. Okay, in the worst of times during the Ukrainian conflict, we kind of bottomed out at about 3%. In the time, in February 25, again, we bottomed out close to about 3%. Now, 3% is not some Lakshman Rekha that will never get broken. But if you are a serious long-term capital allocator and you see that big shift that India's share of economic output is going to rise in point of time to come, if you're going to buy in at 3% of world market cap, you generally should be looking for a very big asymmetric kind of a rise. And this also needs to be contextualized for the fact that, from US, there can be a lot of flows going outside. There's been a lot of money which has chased US assets over the course of the last 15 years. What happens if there is money which is actually going out of US, given the fact that it's exceptionalism, be it on innovation, be it on, let's say, security, be it on the safe haven status, all of that comes under question mark. So I think we should be kind of looking at these opportunities as well. So I would think, therefore, that, now is not the time to panic.
Yeah.
Now is
and
the
I think
time to kind
the
of
point
add
you
on.
made, Harish, earlier, but you used the farmer analogy, right? I think it's such an important point that trying to finesse too much that I'm going to buy 2% lower, 5% lower, over a 10-year period, it's a decimal point change, right? It doesn't matter in that sense. If you're broadly right in the ballpark. So let's talk about what are you doing right now? Let's take energy. I said I'll ask you about energy disruption and who's on the right side of it, right? So who's on the right side of it, Harish?
So, unfortunately, we are all losers because broadly we are large importers of energy, right? But within each sector, when you look at it, there are certain energy efficient players compared to the others. Now, these are going to have outsized gains because in this environment where the going is going to get tough for everyone, the last man standing is the one who is going to take the most out of there, right? So, if you look at, say, some of the larger sectors like, say, cement, which is in effect a huge energy user. I mean, cement is all about transferring from one energy form to another energy form, right? Now, over there, if you've got an edge in form of energy conversion, that is like real solid gold today, right? And that is the one that is going to compound for you in terms of that difference and that dispersion. And that is going to help you gain market share in a very difficult environment. So, I think that would be one area. Similarly, if you think about this entire unorganized to organized in, say, building materials, we've seen a huge amount of unorganized players operating in the building material space, be it in pipes, be it in tiles, be it in ply, be it in other forms of consumer durables, etc. The reality is that a shock like this, typically the weaker hands don't have the purchasing power to kind of remain in business. Again, therefore, there's going to be a greater formalization and a cleaner balance sheet that's going to sustain through. So our call is not that, we have any edge to predict what the next 3-6 months is. But if I am able to identify and distill certain companies which are going to go one leg up compared to the rest of the competition, okay, that gap is likely to sustain for years to come, and that gap is what is going to get alpha for our unit holders. So that would be another area which I would say can come through. Another area could be, there's going to be this huge rebuild that's going to happen in Middle East. I mean, the war cannot go on indefinitely. And imagine the amount of desalination plants that have to come through. Imagine the amount of pipelines that have to go through. These are all economies for whom this is the bloodline, right? And they're going to have a massive amount of capex that's going to come through. At this point of time, of course, there is all this fear. But what happens if even the Ukrainian war kind of stops out? Okay, how about the entire kind of that region wanting to kind of rebuild? So I think these are all opportunities. See, markets are about spotting asymmetric opportunities where the optionality is not being priced. And today we are seeing so many such opportunities which are there, which is why we are not so worried about how to kind of navigate the next 3-6 months. I think if we try and over-optimize that, we're going to miss the bigger opportunity that's going to come through, which is where I would say that, as an investor, one should train their eyes on, rather than looking at how do we survive the next 3-6 months.
Cement, building materials, and
pipes,
and,
even chemicals for that matter.
Yeah.
Right, there can be a whole amount of inventory rebuild, because post the last 2 years, the big problem has been a destocking problem globally. Now, if everybody wants to get back into that supply chain, there can be a bullwhip effect of inventory again going back. So these are all things that are hypothesis. Nobody knows whether they're going to play out in Q2, whether they're going to play out in Q4. The idea is that you kind of identify the best run companies which are positioned and who can execute for that opportunity, and then you can.
Harish, I know you can't talk about specific stocks, of course, because of regulatory reasons, but we've taken the liberty to use your fact sheet in terms of what you own in the fund, and we're putting them up on the screen for our viewers in each of these segments, each of these areas. But within each of these, the 4 segments that you mentioned, you got to pick what is lesser insulated to, I mean, that's what we started with, right? I mean, more competitive generally.
Yes.
The best, the most competitive actually.
Absolutely.
Compared to the others. So it's not like the entire sector, but specific names, and I think that's an important point to make. It's not a call, it's a call on the sector, but also on companies in that sector.
Absolutely. So it's a call that, as the previous guest was saying, that if the baby is thrown all along with the bathwater, that's the time that you have to actually look for the baby, right? And a lot of these sectors have actually kind of got binned. Right, and mind you, these are sectors that have underperformed over 3-5 years. It's not that these have been darlings and suddenly because of this they have kind of cracked. So therefore, there is reasonable margin of safety. A few trades going right over there can make a huge difference for the fundamentals of many of these companies.
All right, very quickly, Sandeep, I want you to comment on this. One of the holdings that you'll have is in a company, Sun TV. And there is this lot of buzz with regard to the IPL. Valuations going at $1.5 to around $2 billion. Who would have thought? It seems there are companies like this, there are value out there. What do you make of this recent deal closure that we've seen on the IPL? And do you believe there's a lot more scope? Because if you compare it with global leagues, then still there's a massive runway ahead.
So, Nigel, the fact remains that it's a new area and people have a lot of excitement. So, you don't get into the valuation because valuation looks absolutely absurd, okay? But the way globally this business has built, I think India also has potential to, so far it's only about cricket, but you look at the women's leagues that are coming up, the hockey is also getting built, and many other sports which the current government is also focusing a lot. I'm also very optimistic about this space. These are the space which people will look from a longer term perspective, and valuation globally has been expensive. So India being a growth area, you can give a premium on the global valuation also. So I think it's a great opportunity from long term.
Okay, I think we could go on, but I'm being told that we are on a clock. And the clock is running out. But I think wonderful insights from both of you. Sandeep, thank you very much for dropping by. Harish, fantastic. And I know you had more. The tariff, who's on the right tariff discussion, that's another time. Thank you very much, both of you.
खेलता है झूलता उछलता है दौड़ता कभी कभी दौड़ कराता है आगे आगे बढ़ता है इंडिया अमूल दूध पीता है इंडिया।
India's sharpest investment voices break down market risks and opportunities that IDFC First Bank presents. Money